We are live. What's up, Brady?
Oh, yeah. What's up, people? It's Brett E., the most positive actor, checking in with you.
I like it. I'm Alex Brown. We're getting after episode 7. Brady, 7 episodes in, man. 7 episodes in.
It's nice. I'm going to keep with the tradition. And for the people, I'm going to say konnichiwa, ni hao, hola, and what's up? It's great to have everybody here tonight. It is going to be another good episode focusing in on some action steps.
Absolutely. Tonight, Brady, you nailed it, man. We're giving them all the action steps tonight, man. Because you know how it is when, like, someone gives you information, but sometimes you need that extra step of, hey, how do I actually do it? How do I practically get started in it? And tonight, man, we're holding nothing back and giving them all the game, much of the game, in fact, of how to get started, man. And so let's let them know who we are and who we are not. Let's go, Brady.
Favorite. I want to say that's my favorite way that you've led into the intros. Like, let me let you know who we are and who we're not. All right. So listen up, people. Who we are not. We are not financial advisors. Do your own research. Come to your own conclusions. It is up to you to be the captain of your own ship for your family and your finances. So you have to take responsibility in doing your own research and don't just follow the trades that we're making. This is just two individuals that are very passionate about finances and about helping you achieve your goal in finance. And we're just sharing the conversations that we have on a weekly basis with you. And our entire channel is made for those who are a little bit nervous about getting into the market, or maybe you've never even, touched getting into the stock market or investing in general. And we're hoping to help you feel a little bit more comfortable so that you can take your first steps into the market, and we'll be with you side by side.
Absolutely, man. I like how you broke it down. Real quick, Brady, I've had a few people to ask me, hey, why do y'all do that? Like, why is that important? And I think you just nailed it, man, and how you broke it down. Like, this is recommendations, but only they have to live out their futures, their financial futures. So why would you want to put your financial future totally in the hands of somebody else when you have to live that reality, man? So I love how you break that down, man. You make it super simple for all of those who are listening in. And so now let's get into this. And so here is for all of our incredible, wonderful audience. We appreciate y'all locking in the community as this thing grows. And just know, just as an overview of our last episode, right? We dealt quite a bit with risk and risk tolerance. If you missed episode 6, when you get done with this, flip it back and reverse it. Go back to episode 6 and get caught up on that. We dealt a lot when it came to what are risk tolerances and also how to identify your risk tolerance. Am I more aggressive? Am I more conservative? Is it high and is it low? Not only that, we even went to another level and they talked about, hey, if you had an extra $1,000, what would you do? What should I do? What could I do with this extra $1,000? And know this, for those who asked the question, does the same thing work if I had 5,000, 10,000, etc.? Well, understand this, we gave percentages. That way, in most cases, though, that scenario still works given those percentages. In fact, if you're already incorporating that into your portfolio, hey, let us know in the comments how you are breaking yours down. Maybe you found something we haven't found yet. Who knows? Drop it in the comments. We're all growing together. And so we would love that. Also, this as a part of the recap, you already know. Go below, like the video, comment, subscribe. Take a moment, do that right now. It's what allows us to continue to grow on this YouTube platform. Because listen, We're taking it from the bottom all the way to the top and want you to go on the ride with us. All right. And so let's get into this, Brittany. You ready?
I'm ready.
Nice, man. We got two big topics, all right, to get into today. And we're gonna kick it off this way, is that we know and understand that because many of you are new to this, when you pull up certain apps on your phone, financial apps, etc., we want you to be fully knowledgeable on what you're looking at, the important parts of those particular apps, what to look for, etc. Right? And so we're taking the next level in episode 7, and we're going to pull up some things on the screen that you can look at with us. Brittany, you ready?
Yeah, we're going to be getting really detailed with you all to try to, because a lot of the feedback that we've been getting are people saying, like, I started to get into it and then I started seeing all these things on the app and I was a little nervous and I didn't do it yet. So it made us know that we need to take a little deeper dive in there so we can pick the folks up and carry you along with us.
Absolutely. Absolutely. So here it is. We're going to pull this up for you all. We're going to start with our very first one. Check this out right here. All right. So here's what we have. What you see on the chart here right now, this is the app Yahoo Finance. For me personally, I use this app every single morning. So, Monday through Friday, right? And so I pull this up in the morning. My Yahoo Finance app. Understand this is that I didn't pull this off of some premium advanced account. This is a basic account, right? You can go to Yahoo Finance and pull this up right from your device. You simply open Yahoo Finance, the app itself, and you click on the button that says Finance, and you will see information come up on the screen. And so here's where I want to start with this, is that we have a very popular company pulled up here on the screen here for you, Apple, right? And so if you go to that circle box, the search bar, that you will see when you first open up whatever your platform is. Again, this here is Yahoo Finance. Click that button and you will put in, for this particular way, you could type in the word Apple, APPLE. When you see that, the ticker you'll see for Apple is AAPL. Whatever company that you're looking up, you can find that particular ticker or symbol for the company that you're looking for. Okay, Apple's is simply AAPL. Now, what you see here on this chart is what you're likely to see when you first go into the app. Understand that this particular chart was a snapshot. I pulled this from like 2-3 weeks ago. Okay, and so I have mine set up, and this refers to an earlier episode of ours where I can see both red and green candles on this chart. Now, why is that important? It's important because green means up or bulls or the upward trend. Red candles mean down, right? Green is up, red is down, keeping it simple. Now, if you wanted it to not be that way and want to have a very simple, even more simplified version of this, in the bottom right hand corner, you would actually, in your bottom left hand corner, more likely, it says chart with the drop down box. You could click that and make it one simple line that simply will be going in an upwards direction or a downwards direction, depending on the company that you're looking at. And so as you look at this chart right here, I want to give you the key things that you want to be aware of. Notice this, that this right here is the first thing is the time period. This right here is covering 2 years. Notice towards the bottom, it says 2020, besides that April, and it goes forward from there. Why is this important? It's really important for all of us because you want to start on basically you want to have a wide look at a company. So if I really wanted to really examine this company, I would click the button that says Max, which is at the bottom center of the screen. If I did Max, it's very simple. It's a zoom out of the company so that I can get as much information as possible. It's like this. If you were in a relationship with someone over a 1-year time period, you have specific information. But imagine on that same person, if you could zoom out over a 10 years time span and see how they've been managing all their relationships, it would give you a really good look at how they will be in the present, right? A good indicator. So this is no different.
It's beginning to feel a lot like spring. Not just out there, in here. The colors are brighter. The smells are earthier. The ideas are bigger. And the appliances are everywhere. Everything you need for spring at our best prices of the season. Feels like spring at the Home Depot. How doers get more done.
This right here, going to the max, will give you a wide view of what you're looking at on this chart. And what I do personally, I start with the max. I go down to the 5-year, the 2-year, the 1-year, and I work my way down. Here's again, I'm doing that start wide, then I zoom in because I simply want to be certain of this. Is this company going up and to the right, which means it's progressing, or is it going down and to the right, which means it is regressing or going down? If it's going down, I don't want to touch it. If it's going up to the right, I want to touch it. Obviously, here with Apple, they're going up and to the right. One last part of this, which is really, really key. Notice this, and here's where we tie in risk tolerance. No company or ETF goes up and to the right in a straight line. You will notice it goes up and it dips a little bit. It goes up, then dips a little bit. Sometimes that dip causes some people to get out. Listen though, but when you have a quality company, a strong company like Apple is in the present, when it dips like that or pulls back, here it is, that stock or that ETF is just taking a break. It's pausing for a moment. No one can run 24 hours a day. You need a little bit of sleep, a little bit of rest. And so when it does that, that company is just chilling out, relaxing for a minute. Some people are selling that stock. Some people are buying that stock. Here's what's important. Now I'm going to turn it over to my man, Brett E. Check this out. If you look over to the right or to your left where it says 159.08 as a green box around it, at the timing of when I pulled this particular chart, Apple cost $159.08, right? Now, the all-time high at the current timing of this snapshot, Apple is at, well, the all-time high was $182, right? So we shared in the earlier episodes, we shared really, really early on, you don't want to buy the top. You want to buy when it's 20, 30, percent off, right? And so here's the last part of this. But notice beneath the green, which is 159.08, beneath that green box, beneath it says 150. Here's what's key. You want to find how many times does this particular stock or ETF go back to a certain number. In this case, you can see a little while ago, it went down to 150, right? For a rest or a nap or a little something, right? And then it did what? It bounced straight back up. That lets us know 150 is a key level and key spot to possibly buy Apple. If it goes below that, oh my goodness, then the deal just gets even sweeter. And so what you can see from this chart is, again, a very simple breakdown, a basic breakdown of when looking at a chart, what to look for. Again, and it goes to a man, Brett E. You want to start out with the time frame. Start big and then go in smaller. Go to max, work your way down. Then look at the candles. Is it red or is it green? Is it going up or is it going down? And then look at where the stock is at that particular time and look at where it took a rest. Where it took a rest or went down a little bit is a good sign of a possible level you may want to look at purchasing that particular stock 20, 30, 50% off of whatever the all-time high is of that particular stock or ETF. That's it. Make sense? I love y'all. I love it. Listen, you have questions, put them in the comments. We can definitely follow up on that. Brett E, man, what are your thoughts, man?
Yeah, so I think it was phenomenal how you explained it. I was just sitting back chilling because I was like, man, I was getting the knowledge myself. I was taking notes. Um, so one of the other ways that you can look up a stock chart is through Google. You can just simply Google the name of that company and put like, so for, we're talking about Apple, so you put like Apple stock, and then a similar chart will come up. That's the one that I use, and it's free to get access to, and you can see the same chart. It doesn't have the candles on it, like the green and the red color. It's just got a one color line showing the trend. And you can kind of use your finger on the Google one, and you can scroll up the
Nice.
line, and you can see the exact dollar amount that was the yearly high, like in the last 12 months.
Nice.
And then what I like to do is you can take your thumbs, and you can put one thumb on the yearly high and drag your thumb over to where the stock is now. And then when you lift your thumbs off of that, it'll show you the range that you just moved those two dots. And it'll tell you like what percentage down it is from the yearly high or what percentage up it is from the
Nice.
yearly high. So that's how a quick way that where I don't have to do necessarily like do like the math of like figuring out exactly what 10% off or 15, 20% off, 30% off. It'll tell you exactly what percentage down or up that it has been since then.
That's really cool.
Um,
I like it, man.
so yeah, so when you get ready and you want to make your move now, and you want to, like Alex was saying, if you want to catch the stock sleeping, catch it taking a nap, and get in on one of the low dips, then you are moving into your app and you're getting ready to place an order. So now, one of the things that we post, so we pull up a screenshot from my E-Trade account. So if you were going to purchase a share of Apple, this is what it would look like. And basically every app is pretty similar. It shows you the basic same information. So just take this as this is one example. Yours might look a little bit different when you get to it. So if you look at the chart, you're going to see the bid and the ask price. So the difference is like how we talk about in a market, there are buyers and they are sellers, or you have supply and demand, right? So bid is what the population that wants to buy Apple is averaging out that they will pay for what they want to pay for a share. And then the ask price is what the people that are currently holding Apple shares are willing to let their shares go for. So they're willing to sell it for a certain price. And then the bid is what the majority of the population want to buy that stock at like that price. And so typically with really popular stocks, the bid and the ask price will be very close together, which means like there's not really a big difference between the bid and the ask. And so when you get the shares, then you're basically paying about the same amount as if you decided your price or if you just went with the price that's up right now, like what it's currently trading at. And so speaking of that, when you move down a little bit, you have your order type. So your order type, right now we're just going to focus on, when you click on that, it would be buy or sell. Right now we're talking about buying shares, so you just click on buy, and then you move down to, or you move over to quantity. So that would be how many shares that you want to purchase at that time. So I think when we made the screenshot, Apple was $166 a share. So that would be for every 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 shares, you pay $166 per one share.
It's beginning to feel a lot like spring. Not just out there, in here. The colors are brighter. The smells are earthier. The ideas are bigger, and the appliances are everywhere. Everything you need for spring at our best prices of the season. Feels like spring at the Home Depot. How doers get more done.
And then moving to the price type, this is one of my favorite parts, is so you have the market order and the limit order. So think about it this way, like I remember when I was in college and I was trying to take a girl to like fancy restaurant. And then, when you get to a menu and you look at the menu and it doesn't have any prices listed next to it, and it just says like market price, you're in trouble because you in college and you don't really have like a big job. And so market price is like basically you're paying whatever the current price is at that exact second that you click buy. And so that's if you just really want to get it right now. You don't want to wait. I need to have the shares. I'll pay whatever the market price is. Just give it to me. Limit is where you set the price that you're willing to pay for it. So let's say if it is 166 a share, and you look at the charts and you decide a good level where maybe it was taking a nap was around 160 a share. So instead of 166, you can click limit, and when you hit limit, it'll say what price are you willing to pay. And so you type in 160 at that price, and then you put the amount of shares that you're willing to buy at 160. So that way you have a budget and it doesn't go over the budget that you set that you're willing to pay for Apple shares, for example. Then once you get down past that, you say term, and the term is, so we'll just focus on two right now, is good for the day, which means like typically like when the stock market closes, if it doesn't, like if no one's willing to sell you your shares at that price, then it just doesn't give you, it doesn't take money out of your account, and it doesn't give you the shares. It's just like null and void, and then the amount of money that you set aside will just go back into your basic account if it doesn't trigger that price point, like the 160. And then if the other option is, now this part may be a little bit different, but it might say good for 60 days or good until canceled, depending on what app you're using. But that will allow you to set that price up, and you can basically walk away from looking at your account every day, and it will just sit there waiting for the price to tick down lower to 160. And then once it hits 160, it'll just trigger and it'll automatically purchase the shares for you. So that's a way that I like to call it. You can like set it and forget it. And you can just set the price you're willing to pay, the amount of shares that that you want, and then it will basically hold that money aside from the rest of your regular stock account, and it'll just wait to pounce for when the Apple stock is taking a nap or sleeping on the job. You can come in and scoop it up.
I like it, man. I like it. That's so good. That's so good. So check this out. When I'm gonna pull up something else here for you. Check this out right here. You all know we talk about, of course, ETFs and index funds here as well quite a bit, right? This ETF VTI is a very popular ETF. It's a Vanguard. The company's called Vanguard. VTI. Notice this. Again, this is still E-Trade. This is a platform that my man Brett E uses a lot. Again, we're not favorable on one platform or the other. We just want you to just get started investing. You may use Vanguard, Fidelity, your banking institution, Robinhood, whatever it is that you use. Again, you will find similar data. But with E-Trade, you'll see here, look, the things that Brett broke down for you are the exact same for the ETF. It's the same order type form. Only thing that changed was the name, the ticker symbol, which is VTI. You see that here? And then the numbers change, of course, because every stock, every ETF has a different number. Notice here on this one, when Brett E mentioned the bid and the ask, notice the same thing on this ETF is that the numbers are very similar. 223.25 on this date. The ask is 223.27. Now, to keep again really simple, as Brett E already mentioned already, that's because these are very popular stocks and ETFs that people really want. So the number is real close. When you find other tickers, other symbols, other companies, that number being asked could be $10, $20, $50 apart. And that just indicates that the market has not, it's not in agreement, close agreement between the buyer and the seller. That's all that means. It's no different from going to buying a home. You may have a number that you want to buy it at, right? But the seller may have a different number. And so what
Right.
happens is there's a gap in there. And so you have to decide, am I going to do a market order, which is giving the seller everything that they want, big shot, off is gone, or I'll place a limit order, which is I'm not budging off of my price. This is what I believe this is worth, and I'm going to buy it at this level, right? And so again, the ETF is no different from the stock. So BTI, Apple, same order form, different numbers. And so the only probably last tip that I would give you all regarding this, which is I learned the hard way. You don't have to learn it this way. You can learn it from us here. Is that when you put in your limit order, if you go that route where you say, I'm buying this and no more, be careful that you say, oh man, I wanted to buy at this number. It kind of got close, but then it went back up again. Well, you have to decide based off of your insight, do I wait for it to come to my number or do I change my limit order to bring it higher? What I made the mistake of is I would see it get in the area of what I wanted to buy something a stock for, and then I would just change to a market order just to get in, not realizing like a week later it would come down to my level of where I wanted to buy it at if I simply was patient. Now check this out. Last thing for me, patience pays, y'all. Patience. I know we spell like patience, like what PATIENC, but I'm calling it patience. PAYTIENCE. Patience. It will pay you if you're patient. For sure. For sure. Brady.
Yes.
I
So,
like it,
like
man.
another thing is looking at what back to what Alex was saying is like looking back at the charts to help you determine what kind of level that you might be able to sneak a stock at. So, like if you think Apple's a good company, for example, right? So, right at the time we made this screenshot, it was 166 a share. Don't put in a limit order of $100 a share and think that like Apple's just going to bend to your will and somebody's just going to be like, well, all right, you got it. Like you have to look at the charts and come up with a realistic range of where you think the company could go. And ultimately, the like Alex was talking about, the company's going up over time. So the other part of that is like the having patience, and then the other part is having too much patience, where you think like the company is just going to drop down to $100, and then you look back 2 years later, you're still waiting on a limit order, and Apple has gone up like 25%, but you still think I'm gonna just hold out and wait till they come back to 100, and Apple's like, we'll see you. So you have to balance that by using the charts and starting to understand, and especially if you watch a stock and you check in and you look at it, you know, like every day, maybe like once or twice a day, like maybe at the beginning of the day when you get to work or at lunch, you check the stock and then you check it at night. And so you'll start to see the patterns, or you'll see something crazy happen and it dips down a little bit too much. And and then that might be like a time where, like me personally, let's say if I'm watching the stock for a while and then I see it drop down like $8 or something like that, like something wacky happened. And I was like, oh, I need to quit messing around. And then I might change my limit. I might change my limit order and just make a market order, because if I'm thinking about, we're talking about Apple. I'm thinking about owning Apple for 5 years.
Mm-hmm.
5 years from now, I'm betting that Apple's going to be worth way more than $160 a share. So sometimes it's also important to just like use some of the information that you get off the charts, but like get in the game, like start getting in the game. Maybe you take half of your money and you do a market order. So you just get in the game. And then you take another half of your money and you put it on a limit order. And then you try to sneak it when it drops down low. But just in case it goes up and it starts to leave you, you still have some in the game that you can get a piece of that action.
That's good. That's good. I think that's spot on. That's spot on. And by then on their levels, Brittany, how you broke it down just now, they maybe is at the level you first mentioned, they get in at a certain percentage, but they don't go all in, like you said, at a certain level. Maybe it's 30% off, whatever. They go in some there, a little more at 50. I think how you broke it down is perfect, man. So that model, if you all will look into that and adopt that kind of model, you will find yourself continuously growing in this stock market as an investor. It's a different hat. It's very different from a consumer. So I like it, Brady, man. How you broke that down, man. That's on point. That's on point, man. I like it. I like it, man. How would you go ahead? Yeah, something?
Oh no, I was just gonna say it's just all about taking action. Just starting, even if your action is setting a limit order and it's like well below what you think it'll hit, just so you can have the practice of setting a limit order and you get the idea of it, is a good idea.
Absolutely. I want to mention there's one thing on the back end of that for those of you who may be in the place of like, hey, I really like this, and maybe you have the money, somewhat have the money, etc. Don't be afraid to do something that we have not talked about, which is you can open like a paper account, which simply is like you can buy. It's like a simulated account. You're not using real money, using like paper money, and so many platforms offer that. That way you can kind of see how an account would do if you put it money in. They offer for kids, all that kind of good stuff. So check that out. Many of the platforms offer that option as well. That way you can kind of get a taste for what's going on for those of you who still maybe a little bit on the fence. This is another option that helps out beginners. But if you're following what we're giving you off the ETF option, top companies, it's a big deal to get in the game. Take action, as Brett E keeps saying, because you don't want to go in 10 years down the line and still be in a paper account. Talking about you wish you should have or whatever. So, hey, get your feet wet and get in the game for sure. Brett E, man, any other thoughts, man? Any final thoughts? All that kind of good stuff, man. What are your what's going on in your mind here?
No, you hit it right on the head. You got it. Just making sure that you are having conversations with your friends, share this video with a couple people, and then, like have a conversation together about what they think about it and what their experiences are. Remember to keep doing that so that you can start surrounding yourself with like-minded people. Because when you share this video and you start sharing our channel out there, the people that you are supposed to mentally click with about that will start showing up.
Makes sense. I like it, man. Another episode in the book. Listen, if you enjoy this hands-on approach, seeing the things on the screen, all that good stuff, make sure you drop some comments below. If you missed it earlier, like the video, share the video, subscribe to the channel if you haven't already. Like, we do this because we want to impact as many lives as possible. So go ahead, like the video, share the video, click the subscribe button, and let's just keep growing together. Brett E, you want to give him the official salute?
All right, to the people, we want to say sayonara, zaijin, adios, and we'll
I like it, man. Episode 7 in the books. We'll see y'all on the next one. We're out. Peace.